Good morning, everybody. This is Matador from freetradingvideos.com. It's Wednesday, September 2nd, 2009, and you can see pre-market here, just a little 3-minute chart of the S&P 500 ETF, the SPY. We are basing sideways at our low from yesterday. We just cracked the $100 mark on the spiders, the century mark. If you zoom in here, you can see that after the big run up to the gap fill yesterday, kind of a lower swing high, higher swing low like we talked about, then a really nice sell-off. It's just beautiful. And a low base type situation has now occurred, and we're there right now. Coming into the day economic numbers wise, at 8:15 we had the ADP employment change for August, minus 298,000. Market was expecting right here at minus 250,000. Productivity for second quarter, 10 o'clock factory orders, 10:30 crude inventories, FOMC minutes at 2 o'clock, and that's going to cover our economic numbers for the day. This kind of a low base type situation and the $100 mark, we need to kind of mark that a little bit. So we were holding up here. If I zoom in, this $100 mark is where I would put support. A little bit of a gap here, big run up. So that is now support that just got tested one time pre-market here. So if we were to open right now, we would be gapping down, not dramatically, but it's there, and we need to watch about how the market's going to react to that. Next stop to my eye would be the 99.30 area, down here to 99.20. So with just a little bit of support around the 99.60 area. So these are all areas, of course. You never nail them to the penny very often, but you can get pretty close. This symmetrical triangle, if you can see it, let me back up here. It's going to be a little bit like I said, and we'll watch out for those areas on the way down. On the way up, the ones that are marked are still relevant. 101, this whole thing back in here, still relevant. 101.60, 102, it's a big one. 102.50, 103, 104. So there are a few in here on the way up, a couple on the way down. That's what we'll be watching for. The TRIN, yesterday, as you already know, if I zoom in here, closed very, very high. That's a pretty high reading, and that's a lot of bearish sentiment in a day, a lot of volume flowing into stocks on the downtick. So if it keeps that up again, that'll be impressive. Typically when things are overbought oversold like this in the broad markets, we get some kind of a rest here, but anything can happen. The TRIN Q, 1.72, again, nothing to sneeze at. That's fairly bearish. And the tick itself, let's just take a look. Spent most of the day below zero. So that is again corroborating that. The VIX, we already had seen that from yesterday. Huge run up, never ending stop even after this high base. Even gave it up a little bit more. So if I'm going to go long today, just be careful and know what you're trading into, even though it's a little bit oversold in one big day. If you look at a larger time frame, that pop up in the VIX simply corroborates the sell-off we saw in the broad markets. So could we be in for a sell-off? Yep. Could we be in for a higher swing low in here or a sideways base? Yes. Anything can happen. All I'm going to do again is make sure that I know the environment that I'm trading into. Very powerful to go into it with your eyes wide open like that. So good stuff, everybody. Hope you have a great trading day. And again, it's fun working with you.